Welcome to the Illinois Divorce Guide podcast, where we break down the complex and emotional process of divorce into manageable, easy-to-understand steps. I'm your host, Greer Howard, and with me is Bobby Buchanan, widely recognized as one of Illinois' top divorce attorneys, offering unmatched insight and experience in family law. Well, Bobby, we've been talking about marital and non-marital property, and today we really want to dive into some real-life questions surrounding this topic because, it really is something that people wonder about when they're going through divorce. And we're going to start with question number one. The question is, my spouse put money into a house I owned before we married, but never got added to the title. What happens to the house in that case? So this is a great one to start with. I feel like this is really common. Let's say that one spouse, owned the house before the marriage, but then during the marriage, the other spouse contributed money, maybe for renovations, maybe towards the mortgage. So, Bobby, does this make the house marital property?
Greer, great question, and I'm excited to do this episode. I'm excited because these are really important questions. I have to preface it with saying I'm not super excited because honestly, this isn't my favorite area of divorce. And the reason is because the law can be kind of gray and it can feel like, well, it could go this way or it could go that way. And you're going to hear me say that a lot today when I go through these questions. And the other part of it is, and we talked a little bit before we started recording about this, is it can feel kind of nitpicky and it can feel like what the law wants to do is different than maybe how we're feeling during the marriage. So it doesn't always feel good or feel fair. And so it's not the funnest thing to work out as a lawyer. Now, I'm not getting paid to have fun, obviously, and we'll figure these things out piece by piece. But I think that's an important kind of caveat before we dive into each question is understand that there's not always going to be some bright line rules, some yes and no, some black and white stuff to understand. We're going to have to really work through this and understand the nuance.
Yeah. I think that's such a great point and something to remember as we're going through all of these questions that there really is a lot of gray. So again, if you can decide between, yourself and your ex-spouse, you have the power, and we always suggest that. So, all right. So we'll go back with question number one. I'll repeat it. My spouse put money into a house I owned before we married, but never got added to the title. What happens to the house in that case? So what do you think, Bobby?
Yeah, so let's break it down piece by piece. So you owned a house before you got married. We know that is non-marital property. Any property that you bring into the marriage that is just in your name is non-marital property. So if nothing happens during the marriage regarding that property, if that property just sits on a hill, nothing is touched, let's say it's already paid off, then there's really no question whatsoever as far as what's going to happen with the house. It's going to go back to you in the divorce. But now we have the situation where your spouse is contributing to it. And the way I understand this question is the contributions are during the marriage. So once we get married and we start making contributions, and for the sake of clarifying this question, let's assume that those contributions are coming from your spouse's paycheck. They're earning money, they're putting it into an account, and then they're taking that money and contributing it to your house, your non-marital property. So a couple different things could happen. Let's say, for example, as a couple, we decide that we're going to renovate the house. And so we take $50,000 of this money that's been earned during the marriage, and we put that towards the renovation. As a result of that renovation, the value of the house is now $75,000 more or $100,000 more. A judge could do a couple things. A judge could say that contribution, that renovation, is marital property, and the marital estate. And now this is where we're going to dive into this kind of crazy complicated terminology. The marital estate is entitled to a reimbursement of that contribution. So when we divorce, we're going to back out that money, put it back in the marital property pot. You get your non-marital property, and then we're going to divide that marital contribution. So that's one way that this could work out, is that we kind of just reverse the contribution. The other
So
one,
for example, so if you had bought the house at 500,000 and the one spouse owned it, and then you did a $50,000 renovation, but now your house was worth 600,000 because of this renovation, your marital property is that extra 100, and that 500 is the non-marital?
yeah, exactly. But now the listeners are probably going, well, wait a minute. The rest of the house, increased in value too. How are we going to decide whether or not that $100,000 increase is because of the renovation, or maybe just the housing market went up?
Sure.
And that there's no clear-cut answers here. And that's why it gets so hard to just, kick these issues to a judge and say, oh, I just want the judge to decide. Well, the judge might not decide it or see it the same way that you do, or see it the same way that your spouse does. And so you could be surprised. So like you said before, that's why it's such a good idea to try to work these issues out by negotiation, through mediation, or through negotiation with attorneys, because once we give it to the judge, kind of all bets are off, and it's really hard to predict exactly what's going to happen. Go ahead.
No, I was going to say, it was just one of the things I was thinking too was it probably depends. I would imagine it would depend how long the married couple lived in the home. I mean, if you had lived in the home for a year or 2 years, that's one thing. But if you had lived there for a decade or 15 years, even if that other spouse didn't work, but they were taking care of the home, I mean, certainly there's, more value to be split up between the two. So a lot of those factors are going to be included, right?
Absolutely. A judge is going to look at how long were you living in this house? And that's not even something we talked about in the hypothetical, but it's important to understand, like, is this a house that you guys are living in? Is this a vacation home? Is this an investment property? All of those issues need to be examined to determine whether or not the marital estate is getting a reimbursement, or there's also the possibility that a judge could decide that there's transmutation here. And that's like this big word that means that a property is changing classification. So it's changing from non-marital into marital.
Well, Bobby, you're using some legal lingo here that everyone might not understand. So I want to take a step back, and you're talking about transmutation. So can you sort of explain what exactly that means and how it works?
Yeah, so transmutation it's pretty simple, actually. It's when property moves from one classification to another. So if non-marital property can become marital, that is the most common transmutation that happens. And as far as transmutation in this example, where we're taking marital money and we're adding it to non-marital property, say for a renovation, a judge could look at that situation, and again, depending on how this property is being used, how long the parties have it in their possession during the marriage, they may make a decision that the entire non-marital property has been transmutated into marital property. I mean, I think there's this classic kind of just very, very basic philosophy exercise where you talk about, if you have a boat and you start fixing the boat and you start replacing things and you end up replacing every single piece of the boat, is it still the same boat that you had before? And it's the same thing with a house. I mean, if you continually do work on this non-marital house, but you renovate every single part of it with marital money, at a certain point, there's nothing non-marital left to it, even though it started non-marital. So that's where we really have to understand that things can go either way. Property can change, or property can be reimbursed, and we got to figure out where we're going to land.
Yeah. Well, I think this leads us to our next question. We can stay on the transmutation topic. Another question we have is, can I argue that I didn't intend to transmute property even if I added my spouse's name to the deed? So we're asking about intent here. So if someone adds a spouse to the deed of a property that was owned before a marriage, can they later argue that they didn't intend for it to become marital property? I have my own thoughts on this, but we'll see what you say.
Well, certainly you can argue it, but are you going to win? Probably not. I mean, that's the crux of this is there is going to be a presumption in this scenario that you gifted your non-marital property. You gifted this house that you have to the marriage. And the only way that you're going to convince a judge otherwise is if there is, and this is another specific legal term, clear and convincing evidence otherwise. So you can't just get on the stand and say, Judge, I wasn't really giving it to them. I just did it because it made life easier. But I always felt like this was my own house. Like, that's not going to pass. You have to have more than that. But I'd love to hear your thoughts on.
Well, yeah, I guess I just feel like if you go to all of the effort to put someone else on the deed of your home, there probably was a reason. Maybe you're refinancing and your credit hasn't been good the last few years. So you need your spouse on the deed because, they have better credit, or, because or maybe just, you do consider it both of your homes. So you want them to be on it. I just feel like you wouldn't go through all of that effort if you didn't intend to, make it marital property.
Yeah, I mean, that's fair. And I'll push back a little bit on that I like the refinance example that you brought up. Like, maybe there is some strategic reason why you need to put them on to refinance, but again, you two never intended that it would become marital. It was just kind of, you were using the status of your marriage to benefit this non-marital property. Now, again, you never intended, but unless you have that in writing, like, you're not going to be able to get on the stand and say, that's how we were doing it. We never really intended. Judges are you got to have it in writing very clearly that it's going to be staying a non-marital property. Really, the best way to do this is using what's called a post-nuptial agreement. And that's like the formalization of these sorts of agreements where we're already married, but we're making some changes in our property. We're doing things, and we want to make sure that our intent is crystal clear. So you can look into a post-nuptial agreement. But again, this is why this is my least favorite area of the law. When we're married, when we're, dealing with our property, it's the first couple years we've been married, we're in love. We're not talking about, is this my property, your property? We're just helping each other because that's what married couples do. And we're not really thinking about it. So then to have to go, well, honey, let's go talk to a lawyer and maybe do a post-nuptial agreement. Because if we get divorced in 15 years, we want to make this clear. Like, that's not very romantic and not something I would ever do. So
I would wonder the statistics, Bobby, on people in a first marriage and how many times they're like putting things in writing to make sure everything's clear, as opposed to a second marriage where maybe they, it didn't work out the way they wanted to the first time. The second time, they're like, okay, we need to make sure the intent is clear on this one. Let's just go ahead and sign the paperwork so everybody knows.
Yeah, I mean, we learn a lot of lessons from our first divorce, and most of the clients that we get for premarital agreement or prenuptial agreements are second time.
Or just older, more established or something. Because ignorance isn't an excuse. I mean, you can't use ignorance. I mean, that's not going to work in a court of law. I mean,
not at all.
Unfortunately. Okay. So our next question is, so my spouse claims they contributed more to our shared accounts than I did. Does it affect how the property is divided? So what they're saying here is if one spouse says, okay, I've contributed more to the joint accounts, does it matter when you're dividing property?
Yeah, so let's play this out. We've been married for 10 years, and I have been the primary breadwinner, and I've had a salary of, maybe when we got married, I was just starting my professional career. I had a salary of $75,000 a year, and now 15 years later, I'm at 250. Maybe it hits 300 if I get a bonus for the year. And I'm putting all of that money into our joint checking and savings, and maybe there's investment accounts and retirement accounts. And my spouse has not been contributing that amount. Maybe they've been working part-time, or that they have a career that is just less, the monetary compensation isn't as much. And so if we look at the last 15 years, I've contributed $500,000 more, $1 million more, whatever the case may be. Aren't I entitled to more? The short answer is no, absolutely not. Like, get that out of your head completely. That is not how it works. The court looks at it as a complete partnership when you're married, and contributions aren't just monetary. And you can't even, don't even try to make the argument, well, my spouse wasn't even a good homemaker. They just sat on their behind and watched TV the entire 15 years. That's not even going to fly. And honestly, that's probably going to put you more in the hole. The court could say, well, you've been supporting their lifestyle for this long. That is how you guys have decided that your partnership is going to be. So not only are we going to split it 50-50, we're actually going to give the other side 60% or 70%, because clearly their earning potential is much less than yours. Mm-hmm. So you do have to be aware that the lifestyle that you guys have is the lifestyle that you chose. And by choose, I mean, you didn't do anything about it. You were okay with it by virtue of the fact that you stayed married these 15 years. So, I don't have a lot of time or patience for people who come to me and are like, I don't think my spouse should get anything because they didn't contribute as much. That's just not how marriage works. And the faster that you can get rid of that notion, the quicker you're going to be able to get through divorce. Because if you want to fight that tooth and nail and make those arguments in court, you're going to wind up with a huge attorney fee bill and a judge that might, throw the book at you, for lack of a better phrase.
Yeah, I think it's such a great point to bring up earning potential as well, because I do think that sometimes, in a relationship, the higher earner isn't really thinking about that, because if the other, if their spouse has been home for many, many years, their earning potential is just different. So that's absolutely something that people need to think about. Okay, so we have another question here. We sort of started to talk about this, so let's dive in a little bit more. What happens if we bought a vacation home together, but only one of us made the down payment? So in this scenario, couple buys a vacation home during the marriage, but one spouse puts down the entire down payment with their own money. But is it even their own money? Is my thought. Like, is it your own money at that point? And is the vacation home marital property?
So let's make some clarification so that we can decide whether it is their own money or not. So just to be clear, we got married, and let's say a couple years into the marriage, we say it'd be nice to have a house on Lake Michigan, so we can go there during the summer, and we find the perfect house. We don't have the down payments in our joint savings account, but one of us had a savings account from before the marriage that's just in their name, that they have never moved any of the money into a joint account. So it is clearly non-marital. Okay. And we decide that we're going to use that money. But we don't really ever talk about it. We don't say, okay, well, is this, and who does talk about it, is this going to be marital or non-marital property when we use your down payment? We don't think about things in terms of divorce while we're married. So what happens then when we get divorced? Well, most likely this sort of scenario, the judge is going to say that it is non-marital property and it can be reimbursed to the non-marital estate. And that's because it can be clearly traced back to the non-marital state. It's clear where it came from. And so that's now I'm gonna pause here, and whether or not the what we do with this pause, but this is where it becomes a little sticky in my mind, where I ask myself, well, why isn't that considered a gift? Like, why wouldn't we just consider that non-marital contribution at this point a gift to the marital estate? And why would it be reimbursed to the non-marital? Because there is supposed to be a presumption of that it is a gift.
So you should represent the client that thinks it's all marital property.
Yeah, exactly. I'm better off representing the one where, I mean, I think that the moral of the story here is, if you're moving money into marital property, or marital, like if you're creating new things, if you're buying assets and non-marital property gets involved, the burden is on you as the non-marital person to say, wait a minute, this shouldn't be marital property, and here's why. Like, everything kind of starts to turn into marital property when you're married. And so that's why it's really tricky. And the lawyer on the other side, even if I'm representing the non-marital property owner, the one that wants their money back, the lawyer on the other side has a much easier way of saying, wait a minute, that down payment was clearly a gift. This was a vacation home. It had both of their names on the title. They used it for 20 years. The idea that down payment should come back is absurd. I think that argument is stronger for the down payment the shorter the marriage. And generally,
I agree. Yeah.
Time can play a big role in these things, where a judge can say, we can clearly see that non-marital payment went in as a down payment. The house itself has not appreciated in value that much, so we don't have to determine, well, how much of that down payment, how much did it increase in value now? What portion of the equity is the down payment? All of those complicated questions get more complicated the longer people are married. So the short answer is, be careful. That down payment very well could be considered non-marital. If you have a shorter marriage, or it could be considered marital. If you have a shorter marriage, those arguments are probably stronger. But again, this is why I don't love this area of the law, because there's no clear-cut answers, and that can be, it's really hard to negotiate, and it is harder to negotiate a settlement if we don't have clear-cut answers and rules from a judge. And sometimes we just have to negotiate around those gray areas and figure out some sort of compromise.
Yeah. So I think basically, if you're going to take that money from the account that was yours before you got married for the down payment, it's probably best to assume that it could be a gift. And if you feel uncomfortable with that, then maybe don't use it as a down payment. Maybe.
Right. And obviously most people listening to this podcast are way past that period, and they aren't watching this, in real time while they're trying to make these decisions. So we'll just say, if you're going through a divorce and you did do this, it might be time to kind of embrace the fact that was a gift. And I think if we're being honest with ourselves, during the time that you did that, did you ever consider that you weren't gifting it? I mean, that's why it has to be clear and convincing and in writing to really rebut that presumption that it's a gift. Because when we're in a marriage and we're moving our non-marital money into a marital property, we generally don't think like, okay, well, I'm going to get this back.
Right.
And this is going to go back to my non-marital property. So just get it clear in writing. Hopefully you did. If you didn't, then be ready to have to concede that point in your divorce and move to a better argument in your divorce or some other area where you might get some more traction in your negotiation.
Well, Bobby, so far we talked a lot about, let's say, investments, things that you're putting your money in that, eventually may grow in value. And, so they're typically things you want to split up because you've probably made some money from it. You're going to get some money back from it, right? And so you're kind of fighting for that. But our next question is on the other end of the spectrum. And I imagine that some of these debates get very, very fiery. So our next question is about how does the court handle debts? Now, like one spouse runs up a credit card during the marriage and the other one doesn't. Are you both responsible for that credit card debt? And is all debt the same? Does it sort of depend on what type of debt? Because, now you're getting into the issue of money that we owe, not money that we're owed, money we owe. So it's a different feeling.
Yeah, much different feeling. And this is an area where there can be a lot of surprises. If you're going through a divorce, it's not uncommon that, there's romantic infidelity and there's also financial infidelity and, financial secrets that happen. So it's not uncommon that during the divorce process, while your attorney is doing their job of investigating and uncovering the financial picture, that you learn about credit card debt that you never knew about, or you learn about tax liabilities that you never knew about. It's much more common than you might think for one spouse to learn that their taxes haven't been filed in the last 5 years, even though they thought they were, because let's be honest, how do we usually do taxes in a marriage? One person is responsible for it. They prepare it. They send it to their spouse and say, hey, can you sign it? Mm-hmm. And if I'm the spouse signing it, because my wife is the one who always prepares it, I trust her. So I just sign it and then I send it back to her. And I just assume that it got filed and I don't really think about it. So a lot of times what can happen there is maybe one spouse has some other financial considerations why, that they haven't been totally transparent with you and they just never end up filing the taxes or something like that. Yeah, it can get pretty heavy. So let's tackle the debt issue in general, and we'll just say that debt acquired during the marriage is marital, and it doesn't matter if you didn't know about it. And this can feel really unfair, but generally speaking, if the debt was the credit card was used and you found out of it and you're like, oh my God, there's a credit card that has $30,000-$40,000 debt on it. I had no idea. As long as it is for some sort of marital purpose, and that's a very broad terminology, you're going to have to pay for it. You're going to have to split it. And I think it's easier to define marital purpose by defining, well, what's a non-marital purpose? And what I think about a non-marital purpose, we're talking about things that could be categorized as dissipation. And this is like wasting marital money or property. Dissipation classically is like gambling, or spending money on a paramour. I'm thinking in terms of how lawyers talk now. A mistress. So if you are, taking these lavish vacations with your mistress and your spouse doesn't know about it and putting it on a credit card, then yes, that might not have to be split. Or if you have some sort of gambling addiction, that might not have to be split. Although if you have a gambling addiction and I know about it and I'm okay with it, by virtue of the fact that I've never divorced you before and you've just had your gambling thing, then I can't all of a sudden say, well, I shouldn't have to split the debt because of that. Like it's an addiction, but it's also just kind of your hobby.
Right.
And so you have to be prepared for that. So generally speaking, if the debt was acquired during the marriage, you are going to have to split it. And that goes to those tax returns that haven't been filed either. Generally speaking, you're going to have to get all that sorted out during the divorce process. Go to the IRS. You guys are going to figure that out together with the help of your lawyers, figure out how much you actually owe, maybe broker a deal with the IRS on how it's going to be paid off, and who's contributing what to those payments and how is going to be baked into your settlement agreement. I mean, it could be one of those things where the proceeds from the house are now used to pay off some tax liability. And
Right.
it really is, it can be a day of reckoning or a moment of reckoning when we go through this divorce process to kind of have to pay off all of these actual debts and these debts in the sense of like maybe we've turned our eye or we've wanted to blind ourselves during our marriage. We knew things that were going on. I think most of us could probably sit back and go, it didn't feel right. I kind of felt like something was going on, but I hoped it didn't, and I just wanted to ignore it. Well, you kind of have to pay for that ignorance at this point.
Yeah. And I guess, I was sort of thinking about like, quote, like toys in a sense, and toys and maybe in like a boat or like a sports car, or some weekend, something. And let's say you had a big loan on that, but let's say one person wanted to keep it. I mean, then that becomes their debt, right? So if they want to keep the boat, but you owe money on the boat's going to your ex-spouse and they're going to worry about that. That kind of stuff would get separated.
Frickin' boat. That's why we're getting divorced.
Yes,
That boat. I just hated that boat.
Oh, boat. It's just a money hustler. Okay, so let's our next question. What happens if a spouse inherits money during a marriage and uses it to pay off debt? I think this is a great question. So I know that inheritance can sort of be a tricky topic. But if you are to inherit it, let's say you pay off a mortgage or you pay off a credit card, does your inheritance then become marital property, or is that still considered, I guess, yours whenever you get divorced?
Yeah, I think this is another one that falls in the category of like, I don't like thinking about this or talking about this because it really is. The short answer is, it's probably a gift. Like you took this non-marital money and you paid off this marital debt. And you never intended when you were taking your non-marital money to pay off this debt that you were going to get it back in any sort of way. It was just like, this is the right thing to do. My money is your money. And I think that expression is, really speaks to the difference between the law and how we actually operate in a marriage. Because my inheritance is my money. It's not your money according to the law. But a lot of people, when we get married, my money is your money. And so we act that way. And then when we get divorced, we want to go, oh no, wait a minute. My money is my money and I want that back. And that's not fair. I gave all this money to our marital debt, and it's not fair now because the marriage actually didn't work out, so I want it back. So again, there is nuance here. There are arguments to be made that was a non-marital contribution, that it can be traced back to a non-marital account, and there should be reimbursement. But the stronger argument is always going to be on the side of the person that says, wait a minute, that was a gift. You gifted it to the marital estate. There should be no reimbursement. So just prepare yourself for that as you go through this process, that, nothing is going to be, it's not going to be as clear cut to the judge as you want it to be in your own head, or what you think is fair, because what you thought was fair when you did it and what you think is fair now that you're getting divorced is probably two different things as well.
Right. What if there was a scenario, let's say that you didn't own a house yet, you're a couple, you didn't own a house yet, and one spouse gets a large inheritance and they decide, hey, I'm going to buy this house in cash in my name, and we both live there over time, but the one spouse bought it with the inheritance money, didn't have a mortgage, didn't add them to the deed. Could they then claim that that house was theirs and the other spouse does not have claim to the home if they divorce?
Yes, absolutely. And I think that this is one of the exceptions to the general idea that everything kind of starts to merge into being marital. Getting that inheritance, and there's some important things that you said. It's from an inheritance. That inheritance was only to you. You bought a house. It was only in your name, and you bought it in cash, meaning you didn't get a mortgage, because once you throw in a mortgage, then you start contributing marital property and make those mortgage payments. And you run into these issues of, well, how much of those down payment questions, like how much of the down payment is the actual value of the house? How much are the mortgage payments? So if you're paying the whole thing in cash from an inheritance, you have a much stronger argument that whole entire house is non-marital. Just make sure you don't put them on the deed or something like that.
Right. Okay, just, interesting things, gotta know about. Okay, so we're going to keep going on these questions. Can one spouse keep their retirement account if they earned it entirely during the marriage? So retirement accounts are another hot topic. I think especially in situations where maybe one spouse has a retirement account, the other spouse does not have a retirement account. Maybe someone's working, or maybe there's a lot more in one of the accounts. So is there any way for them to keep it for themselves, or is that something that typically is split up?
This one is, despite the other ones being a little bit more nuanced, pretty clear cut. That retirement's going to be marital. If your spouse didn't work at all and you did, and you contributed to this retirement account, all those contributions during the marriage are marital contributions, and so is the retirement account. It can be a pretty bitter pill to swallow, because when we're together and we're working towards retirement, we're thinking, okay, we're going to retire under the same roof. We have a certain idea of what our expenses are going to be together. We're going to be in that partnership so we can talk about our expenses. So we can say, well, honey, we can't afford that vacation, or we can't afford that renovation. And we're more in a partnership to control our expenses. Once we get divorced, we almost double what our expenses are going to be between the two of us, because now we have two households, but we haven't doubled our retirement. So it can be a pretty nasty blow to realize that what you thought was going to be your lifestyle during retirement isn't anymore. You might have to pick up a part-time job. You might have to live in a cheaper area during your retirement. You have to change things around because your picture has changed. But yes, that retirement account's marital. It doesn't matter that you just contributed to it.
Okay. All right. Now, next question is, okay, starting a business during the marriage, is that automatically marital property? So businesses.
Yeah, we could do an entire episode on businesses and classification of businesses and valuation of businesses and that sort of stuff. To answer this question as succinctly as possible, a business started during the marriage is considered marital property. And so if there was some sort of aspect of that came into play, some sort of non-marital aspect that came into play, maybe some sort of investment from non-marital funds that helped found the business or something like that, that's all going to have to get unpacked through a business valuation. Sometimes that doesn't make sense because business valuations are very expensive. So doing kind of these more forensic steps on a business is only going to make sense if there is some real value to the business itself. Sometimes we think like, oh, my spouse does own a business, but they don't really own a business. They just own a job that, it's not like a business with processes and a sales department and an operations department that is truly of value. You could sell it on the marketplace. Those sorts of businesses, it does make sense to spend 5 figures on business valuators or consultants to look at that and how we're going to divide it. Smaller businesses, usually, if your spouse has just started, let's say, a salon or something like that, it's probably simpler to just say, that's yours. I'm not gonna fight over that. That's your skill, your trade, and go that way. So two kind of different sorts of businesses. But to answer your question, business started during the marriage, probably marital.
Probably marital. Okay, so our final question here. What if a spouse bought a car with their own money during marriage? Does it count as marital property?
So let's define own money again.
Right. Where did it
That's
come from?
Yeah, where did that money come from? That's ultimately what we need to figure out here. If they bought it from a non-marital account, they had money before the marriage, and that the car is just titled in their name, then it's probably non-marital. If they bought this house or this car using funds that were acquired during the marriage, then it's marital. And to kind of go back to what we touched on, we're talking about debt. A lot of people buy cars and they have a note on the car, so that's the debt, the note. Whoever takes the car is going to take the debt. It can get a little bit tricky because when we're dividing up our assets, oftentimes the person that maybe needs the car or is entitled to the car might not actually be able to get the note in their name. Maybe they don't have the income to do it, the credit to do it. So we're stuck in this position of, well, the asset should go over here, but the note can't really follow them. And in those cases, we have to probably sell the asset. And if there is some proceeds from the sale, those would be divided. If there's no proceeds and there's actually some sort of debt still remaining, that's going to have to be split in some sort of way.
What about a situation where, let's say, because I mean, a lot of couples, I'd say, most couples who, unless you live in like a city or somebody works from home, a lot of people have two cars, per household. Each, there's kind of two cars that everybody's using. And let's say they're both paid off. Okay, they're both paid off cars. And one is like a really nice car. It's like a brand new SUV. And then the other one's kind of like this junker sedan, right? That, they have the nice car and then they kind of got the one that they kind of just bebop around town, burn all the miles on.
Yeah.
When you split, is it considered like, well, you have a car and you have a car and each of you have a car, so it doesn't matter? Or is it like, well, this car is worth $50,000 and this car is worth $5,000. So we have to come up with how to make it fair for that difference of that $45,000.
Yeah, absolutely. If you do have really, I mean, even if the cars are close in value, what the attorneys are going to end up doing, or what you should do before you get the attorneys involved and you're trying to negotiate this, is put everything down on a balance sheet and figure out what is a fair value for that SUV, what's a fair value for the junker, and put it on the balance sheet. And if one person's getting the SUV, then we need to figure out where's the other $45,000 going to come from in order to balance those two things out. So like any other asset, we do need to look at the actual values of the car to figure out how we're going to split them up and whether or not payments need to come from one place or another.
Yeah. Yeah. Very, very good. Okay. Well, we've been through a lot of questions today. Any closing thoughts or reflections on these questions about marital versus non-marital property? You got through it, Bobby.
I did it. Not my most favorite area, because honestly, if I want to say and never, if I get divorced, I would be the person saying, I don't want to think about this. Let's just split it 50-50. I'm not going to fight over it. And I think there are a lot of people like that. And there's other people that really want to drill down and get in the nuances. But I would say be prepared to have to give up on some things as you go through your property negotiation. If you were the one that was the breadwinner, if you were the one that came in to the marriage with more property, with non-marital property, be prepared mentally for the fact that you're going to have to give up, concede some of that, because that is kind of the way that the law looks at things. Things start to merge into marital property. That doesn't mean that, as your attorneys, we're not going to drill. It's our job to drill down into the nuances, and we do that on a case-by-case basis, and we figure out whether or not you truly do have a good argument for us to say, you know what, this one is worth fighting over because the fees for your attorneys are not going to greatly exceed what you could get from this. Mm-hmm. But most of the time, it doesn't make sense to spend attorney fees on fighting over things where you're probably going to lose, or it just makes more sense to negotiate it out. So just mentally prepare yourself for that side of things.
Yeah. Well, Bobby, thanks so much for all of your insight today. And if anyone out there has any questions, we're going to continue to do episodes like this. So please let us know your questions, and we will make sure to get to them in a future episode.
Thank you for listening to the Illinois Divorce Guide podcast. We hope today's episode gave you clarity and support as you move forward on your journey. If you found this episode helpful, please subscribe, rate, and review us on your favorite podcast platform. Tune in next week for more insights and expert advice on the Illinois Divorce Guide podcast.